In today's show, Bitcoin risks the worst August since 2015 as hodlers brace for September, quoting Trader J, historically September down month. September, and quoting Josh Rager, equity markets in general isn't looking good right now, so this dip on Bitcoin is a reflection on that. September in general isn't historically a great month. Possible dip here that ends up being buyer's opportunity for following months. I'll be a spot buyer for long term on sub $20,000. And quoting Galaxy Trading, Bitcoin on the monthly time frame, things look really ugly. If in 3 days the monthly candle closes below 20,000, this could trigger a big sell-off to at least 14,000, where the next big support is located. And quoting CZ, the Binance CEO, Bitcoin first got to $20,000 5 years ago. Bitcoin is around $20,000 today. Today's price does not erase all the development and adoption in the past 5 years. Price is just a reflection of mass psychology, not progress. Bitcoin will be here 5 years later at a different price. And quoting Lark Davis, Bitcoin is going to $1 million per coin. Does it even really matter that much if you bought it for 20, 30, or 40,000? The patient will be rewarded. Also in today's show, Bitcoin mining difficulty set for 8-month record gains despite the Bitcoin price dip. That's right, Bitcoin may have hit 6-week lows under $20,000, but its network fundamentals are anything but bearish. Also in today's show, crypto titan Coinbase says it's open to any Ethereum proof of work fork following the highly anticipated merge scheduled to be released in a couple of weeks. Quoting Coinbase here, Coinbase is committed to fully supporting the upgraded Ethereum proof of stake chain following the merge. Also in today's show, CEO of the company behind Avalanche says capital is sitting on the sidelines waiting to jump into crypto and explains why. Quoting him here, I personally think the winter will be here for a little bit longer, but what I'm really looking forward to is these new applications, these new protocols that literally redefine the way businesses operate and will be built. Also in today's show, Analyst says Bitcoin could repeat gold's rallies of the 1970s, but there is a catch. That's right, Nicholas Merton from DataDash says Bitcoin can follow in the historical footsteps of gold and spark a massive rally to 6 figures, but notes that the king crypto has further to fall first. Quoting him here, after that, we can have really green pastures for Bitcoin, starting to charter into the 6-digit territory that many people have talked about since the previous bull market towards $100,000, $200,000, you name it, as people start to lose faith in the base currency, the dollar being the world reserve currency. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. I also do a $50 Bitcoin giveaway every single day. And the winner from yesterday's episode is Michael Jackson. Congratulations, you just won $50 in Bitcoin. He wrote the following comment, JV, either you nice or you trippin'. I know other YouTubers around crypto with hella more followers, but I don't see them giving out $50 every day. Looking out for your fan base, 100, much respect. Be sure to include your Bitcoin address in the About section of your YouTube channel so I can send you your $50 in Bitcoin. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you're subscribed to the channel. Will Smith, that like button, and drop a comment below, and a comment will be selected as the winner in tomorrow's show. Best of luck. All right, welcome back to another episode of Crypto News Alerts. This is podcast episode number 1030. I'm your host, JV. Happy Sunday. As usual, we have a lot to cover, so let's dive right in. Bitcoin is on track to see its worst August performance since the 2015 bear market, and next month, maybe even worse. That's right, data from on-chain analytics resource CoinGlass shows that Bitcoin has not had an August this bad for 7 years. Literally, after 2 major Bitcoin price come downs in the recent weeks, Bitcoin hodlers are understandably fearful, but historically, September has delivered even worse performance than August. So currently sitting at $20,000, Bitcoin is down 14% this month, making this August the biggest loser since 2015, when Bitcoin posted an 18.5% red monthly candle. Now, subsequent years have proven that August can be a mixed bag when it comes to Bitcoin price performance, such as 2017, the largest crypto gained over 65% in a bullish record, and 1 month which has left no one guessing when it comes to probable price action, however, is September, already famous as a red month for Bitcoin. Average losses since CoinGlass records began in 2013 have been almost 6%. quoting Trader J, historically, September, down month, September. So this time around, macro instability is combining with tradition to deliver the gloomy projections from top analysts, quoting Josh Rager right here. Equities market in general isn't looking good right now, so this dip on Bitcoin is a reflection on that. September in general isn't historically a great month. Possible dip here that ends up being buyer's opportunity for following months. I'll be a spot buyer for long term on sub $20,000. Rager was continuing a debate over the likelihood of Bitcoins from the Mt. Gox rehabilitation process being sold en masse by creditors due to receive them after an 8-year wait. As previously reported, many believe that such an event will not occur, with fears to the contrary unsubstantiated. Now, monthly chart looks really ugly. Turn into the monthly close. Nervous commentators focus on whether Bitcoin could avoid a monthly candle finishing below the $20,000 mark. What's ironic, pointed out by the Binance CEO, CZ, Bitcoin first got to $20,000 5 years ago, back in 2017. Now, Bitcoin is around $20,000 today. Today's price does not erase all the development and adoption in the past 5 years. Price is just a reflection of mass psychology, not progress. Bitcoin will be here 5 years later at a different price. You're damn right. If we close this week below the $20,000 mark, Bitcoin would rival June in terms of lows absent from the chart since the end of 2020. And worse still, such an event could spark a snowball sell-off effect. Concerned Galaxy Trading warned Twitter followers over the weekend, quoting him here, on the monthly time frame, things look really ugly. If in 3 days monthly candle closes below 20,000, this could trigger a big sell-off to at least 14,000, where the next big support is located. The reason is closed below 19,900 means bearish, engulfing candle, which in a big time frame is really bad. So a move substantially below 20,000 would violate a pivot zone in place since the first move about that level back in 2020, as highlighted by Caleb, senior market analyst of Cubic Analytics, quoting him here. Bitcoin looks poised for a deeper retest of the key pivot range identified by using the December 2017 monthly wick and close. This range acted as perfect resistance in 2019, acted as a launch pad in 2020, and has been attempting to act as support in 2022, which you can see here in this chart. And quoting Lark Davis, Bitcoin is going to $1 million per coin. Does it even really matter that much if you bought it for $20, $30, or $40,000? The patient will be rewarded. Sage advice. And before I break down next story of the day, Bitcoin mining difficulty set for 8-month record gains despite the Bitcoin price dip. But first, let's take a quick look at the overall crypto market. You see all the major cryptos currently correcting, and in the red, we got Bitcoin down over 1% for the day, trading under that critical psychological level of $20,000. We have Ether down 2.2%, trading under $1,500, while Binance Coin, Solana, Avalanche, XRP, Cardano, you name it, all correcting and in the red. But all right, now let's break down the next story of the day. Bitcoin may have hit 6-week lows under 20,000, but its network fundamentals are anything but bearish. That's right, the latest on-chain data shows that, far from capitulating, hash rate and difficulty are making snap gains. Despite being down about 7% for the week, Bitcoin is not putting off miners who have recently exited their own multi-month capitulation phase. Now with hardware and competition returning to the network, fundamental indicators are firmly in up-only mode as August draws to a close. This is neatly captured by difficulty, an expression of, among other things, the scale of competition amongst miners for block subsidies, which is due to increase by an estimated 6.8% next week. And according to data from on-chain monitoring resource BTC.com, this will be the highest upward difficulty adjustment since January of this year. Not only that, but should the 6.8% increase materialize, difficulty will jump to new all-time highs. Quoting Block Bridge's Miner Weekly forecast, we may see a difficulty jump doozy enough to set a new or close to a new all-time high in a few days. Block Bridge nonetheless noted that the current climate was not easy for all network participants. Those with older equipment, for example, were feeling the squeeze thanks to spot price losses and equivalent drop in value of block subsidies and fees versus costs, such as electricity, as they share here. Long story short is that the bear market is really crashing those with inefficient mining fleets. Now let's discuss the hash rate, which rebounds to target all-time highs. Back to the more bullish numbers in Bitcoin's hash rate, looks to be copying difficulty and a fresh push for new record highs. According to estimated data from monitoring resource site Mining Pool Stats, the hash rate stood at 246 exahashes per second as of August 22nd, inches from all-time highs of 251 exahashes per second measured in late April. Hash rate is always an estimate, and its value fluctuations do not imply direct increases or decreases in miner activity, but we do know that the Bitcoin Bitcoin price typically follows the hash rate. It is what it is. And before I break down next story of the day, crypto titan Coinbase says it's open to any Ethereum proof of work fork following the highly anticipated merge. But first, let's take a quick look at the overall crypto market cap, sitting back under that critical $1 trillion milestone with about 54 billion in volume in the past 24 hours. The current Bitcoin dominance is 39.6%, with the Ether dominance at 18.7%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have eCash up almost 38%, but still trading at virtually nothing. We have Synthetics up almost 9%, trading just under $3, followed by ICP up 5.4%, trading at $6.42. And checking out the top 100 cryptocurrency gainers for the past week, you can see many of the altcoins have major losses in the red, with a handful in the green, including Luna Classic up 38.6%, ZEC up 31.5%, and Chili's up 15.4%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated at 28 out of 100 in fear. Yesterday at 28, last week at 27, and last month at 39 in fear. And if you're not familiar with the Crypto Greed and Fear Index, extreme fear can be a sign investors are too worried. That could be a great buying opportunity, like we're witnessing right now. BTFD, buy that freaking dip, especially sub $20,000 Bitcoin. And when investors are getting too greedy, that means the market is due for a correction. But all right, now let's break down our next story of the day. Top U.S. crypto exchange Coinbase, the largest in America, says it's open to supporting any legitimate proof of work fork of Ethereum after the highly anticipated merge slated for September. The current tentative date is September 15th, so literally just 2 weeks away. How many of you are currently bullish on the merge? Let me know in the comments below. Coinbase says that it wants to look at each future Ethereum fork on an individual basis, as they announced here on crypto Twitter. Coinbase is committed to fully supporting the upgraded Ethereum proof of stake chain following the merge. At Coinbase, our goal is to list every asset that is legal and safe to list. We will evaluate any ETH fork tokens following the merge on a case-by-case basis in alignment with our standard asset listing policy. Rest assured, all potential fork tokens of Ethereum, including proof of work forks, will go through the same strict listing review process that is done for any other asset listed on our exchange. And late last month, in an interview with Lex Fridman, Coinbase CEO Brian Armstrong said that the crypto exchange's goal was to ultimately list as many tokens as possible as long as they met the company's standards as far as security, compliance, and the actors behind the projects. Quoting them here, we look at some compliance pieces to it as well, like the actors behind it and any kind of criminal history and things like that. If we believe it meets our listing standards, basically this test of legality and everything for customer protection, then we want to list it because we want the market at that point to decide. It's kind of like Amazon or something like that, where a product might have 3 stars or it might have 5 stars, but if it starts to get 1 star consistently, it's probably fraudulent or defective or something, and maybe Amazon will remove it. Otherwise, you want to let the market decide what these things are. My belief is there's going to be millions of these assets over time, so I hope it doesn't make news every time we add one in the future, basically. So there you have it. Expect Coinbase to add many more ish coins. And before I break down next story of the day, CEO of company behind Avalanche says capital is sitting on the sidelines waiting to jump into crypto, as well as Analyst says Bitcoin can repeat gold's rallies of the 1970s, hitting hundreds of thousands of dollars per coin, but there is a catch. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 1,300 plus videos right here on my YouTube channel. And to qualify to win $50 in tomorrow's $50 Bitcoin giveaway, just make sure you subscribe to the channel, turn on all notifications, Will Smith that like button, and drop a comment below, and a comment will be selected as the winner on tomorrow's episode. And of course, you can follow me all across all the major podcasts and platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes, and all across social media, from crypto Twitter, Facebook, Telegram, Instagram, and TikTok. So wherever you're at, be sure to plug in and follow me there. But all right, now let's break down our next story of the day. One senior executive at the tech firm building the smart contract platform Avalanche believes many crypto investors who currently hold stablecoins are gearing up to buy into the markets. In a new interview with Bloomberg, Ava Labs president John Wu says that the crypto industry's underlying fundamentals are getting stronger despite a steep decline in market cap. This past year, he expects stablecoin holders will reinvest to reap significant profits down the road. Quoting him here, what the market needs to understand is that there will be alpha in the crypto asset space. There are very good reasons for that. The fundamentals are absolutely increasing and improving, and as far as the technicals, you can think about the crypto market caps. They've gone down, but stablecoins have not. That tells you a lot of people are just hiding in there, ready to deploy. Now, alpha refers to when investors gain more than the average return of an asset. When it comes to Ethereum and its upcoming transition to a proof of stake consensus, Wu says that the merge will generate alpha profits regardless of whether ETH and Bitcoin's risk correlation against the Nasdaq falls from its current 0.75 level. As shared here, that's a huge catalyst. I think what's going to surprise people is that 0.75 correlation, no matter where the market goes, will go down. You're going to have some alpha in the space. In statistics, a correlation coefficient of 1 indicates a perfect linear relationship. The tech executive concludes by discussing the end of the bear market and what's next for the crypto space. Quoting him here, I personally think the winter will be here for a little bit longer, but what I'm really looking forward to is these new applications, these new protocols that literally redefine the way businesses operate and will be built. What you can do when tokenization is here in full swing is you're going to encode the business logic into a smart contract, and then the platform is the business. Wu then cites the example of how employees at the decentralized exchange Uniswap are able to account for much more daily volume per person than the larger centralized exchange Coinbase. So there you have it. And to watch this interview with the Ava Labs president on the Ethereum merge, check the show notes below the video in the description. And now let's break down our final story of the day, the moment we've all been waiting for. A widely followed crypto analyst says that the top digital asset, the king crypto Bitcoin, can follow in the historical footsteps of gold and spark a massive rally. Send it. In a new video update, host of Data Nicholas Merton tells us 500,000 YouTube subs, Bitcoin could eventually reach a target or a price tag of 6 figures, but notes that the king crypto has further to fall first. Quoting him here, we could start to see the asset trade similar to gold. I'm going to make the case today about how Bitcoin can very well be that asset, especially after going through a steady decline of 75% or so far, and will likely go through a decline of around 80 to 85% at bare minimum. After that, we can really have green pastures for Bitcoin, starting to charter into that 6-digit territory that many people have talked about since the previous bull market, towards $100,000, $200,000. You name it, as people start to lose faith in the base currency, the dollar being the world reserve currency. Now an 85% decline from Bitcoin's all-time high of around 69,000, which we hit back in November of last year, suggests a downside target of $10,000 per Bitcoin. Let me know if you agree or disagree with crypto analysts that we're likely to see a Bitcoin floor in this cycle as low as $10,000, and would you take advantage in BTFD? Let me know in the comments below. Now Merton says that as inflation continues to ravage the global markets, people will start to sour on fiat currencies, causing them to move their capital into Bitcoin, much like what happened in the 1970s with gold. As he shares here, if the Federal Reserve cannot lead the way in cooling inflation, if the Fed can't do it, we're going to lose faith in not only the dollar, we're going to lose faith in the world's range of fiat currencies. If there is no stability in the dollar, there's going to be a lot of global liquidity that's going to want to go somewhere, and that's exactly what happened to gold in the 1970s. Preach. And to watch this entire video analysis with Nicholas Merton of Data entitled A Positive Outlook on Bitcoin and Crypto, check the show notes below the video in the description. And what are your thoughts surrounding Bitcoin hitting $100,000 to $200,000 as he predicts? Let me know in the comments below. And now for a quick recap of what I covered with you here in today's show. Bitcoin risked worst August since 2015 as hodlers brace for September. Also in today's show, I shared that Bitcoin mining difficulty is set for 8-month record gains despite the Bitcoin price dip. We also discussed crypto titan Coinbase as it's open to any Ethereum proof of work fork following the highly anticipated merge, as well as the CEO of company behind Avalanche says capital is sitting on the sidelines waiting to jump into crypto. And I also shared with you, analyst Nicholas Merton says Bitcoin can repeat gold's rallies of the 1970s, hitting multiple hundreds of thousands of dollars per coin, but that there is a catch. We can crash to $10,000 first. But where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Graham wrote, JV, love your energy and enthusiasm every morning when I stay up to date in the cryptoverse through your news on my morning commute. Love the positivity throughout the bear market too. Hodl hard, my man. Much love and respect, fam. I appreciate your continued support. Our next featured comment comes from Freddie Jones. Another great show, JV. I can't say that I agree with O'Leary that crypto will not rise above $25,000 without regulation. Bitcoin rose from trading less than a penny to over $69,000 in little over a decade without regulation, and I am sure it can rise again, if not higher. Is this guy for real? Continue to hodl and don't be discouraged by nonsense opinions. Bitcoin will see new all-time highs with or without regulation. Facts, fam. Preach. And our third and final featured comment comes from Josh Skelton. Great show again, JV. Keep putting in the work. I love this current market and looking forward to the future of BTC. Cheers, fam. To be featured on tomorrow's episode, drop a comment below. You'll automatically be qualified to win $50 in tomorrow's $50 Bitcoin giveaway. Just make sure you subscribe to the channel, turn on all notifications. Will Smith that like button, drop a comment below. And I look forward to seeing you on tomorrow's episode. Peace.